Hi everyone, welcome back to the channel. This video is a part of the monthly portfolio update series made for the individuals invested with me on eToro. During September, the portfolio was up 13.82%, and for the year, we're up 40.28%. We are invested in Alibaba, KWeb, Cooper Standard, VF Corp, GXO, Baidu, JD, Estee Lauder, and Crocs. The first thing that I'd like to address is the sale of Warner Brothers Discovery. In late September, I decided to sell half our position in Warner Brothers Discovery. This was done because I wanted to have a higher cash position going into October. It was purely just as a precaution. By the time we entered October, we had a profit of over 100% on our Warner Brothers position. I did not think that there would be any near-term catalyst, so I further sold the entire position just to grow our cash. As we enter the period of volatility in October, I have been gradually adding to our existing holdings. We still have a 16% cash position ready to use as and when opportunities come up. Moving on. In this update, I wanted to go over our largest position, Alibaba, and explain my thinking over the past 3 years. The majority of our current position was built on buys starting in October 2022 and throughout 2023. By October 2022, Alibaba's share price had declined more than 70% from all-time highs. Regulators were targeting platform companies. Investors were concerned about the corporate governance under the VIE structure. Globally, the world was very bearish about China due to the slower recovery post-lockdown. But throughout this period, I tried my best to remain focused on the core business and not just listen to the news. Alibaba's core business metrics remained resilient. Its China commerce segment, comprising of Taobao and Tmall, continued to serve over 1 billion annual active consumers and generate substantial free cash flow. Aliyun, or Alibaba Cloud, was the largest cloud provider in Asia and maintained double-digit revenue growth. The market was pricing in permanent impairment. Yet at approximately 8x forward earnings with a net cash position of more than 70 billion, the valuation implied a distress scenario. And this was far from the reality of the company. The dip in October 2022 created a high conviction entry point for me. We were buying Alibaba, Tencent, and KWeb hand over fist during this period. And then came the first twist. In March 2023, Alibaba announced a 1 plus 6 plus N reorganization, splitting the company into 6 independently managed business groups. This move was short-lived since by September 2023, the CEO Daniel Zhang was replaced by Eddie Wu. Eddie Wu was one of the original co-founders of Alibaba. Along with him, Joe Tsai, another co-founder of Alibaba, took over the role of the chairman. I think that it was this pivot that rescued the company. Now we had the founders back in place, and the company started to backtrack on its plans to split up. In fact, they were more clear about their areas of focus. It was at this point in 2023, late 2023, that after studying the background of the new management, I realized that Alibaba was going to be the cheapest way to play this long-term trend of cloud computing and AI. This future potential and growth, it was all backed by the margin of safety from the e-commerce business that was the main cash cow. With no net debt and plenty of cash, the company was buying back stock every week, returning money to shareholders. In November 2023, the company announced its first ever dividend, $1 per ADR held. But the most difficult period of holding was in 2024 because nothing happened. Under the surface, the company was being restructured under the new management, but the stock price remained flat. At this point, our portfolio was terribly lagging in terms of performance to the Nasdaq and against other investors on eToro. However, all that has changed in 2025. The narrative has started to change. I still think that the move that we've had in these few months, it's just the beginning. The upcoming earnings season is going to set us up for a strong finish to 2025. But the majority of our gains are going to come through in 2026. The same way that the market fell to peak pessimism in 2022, 23, and gave us an opportunity to buy Alibaba, I think the market will swing to a sense of optimism, perhaps even euphoria, sometime over 2026 to 2030. And as investors are euphoric about the potential of Alibaba and China tech, we will be selling our holdings to them. Until then, we're also a lot more diversified, so hopefully the other holdings that we have also deliver in the meanwhile. Being invested in the China tech space has been an intense test of mental fortitude, and it has strengthened my temperament as an investor, I think. I'm expecting our payoff in 2026 to be well worth this wait. This has been a short update, but once earnings season actually begins, I'll be delving deep into the other companies that we are invested in. As always, do share any questions that you may have in the comments below, or feel free to reach out to me through the links in the description below on my Twitter or Instagram. That's it for me from this update. Take care.